Well, hello folks, I'm LA Little, and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective. Each time we ask ourselves one question: what happened today? What does it tell us about the coming ones? Do this show 4 times a week. I do it Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. If you subscribe, to content, anytime content's pushed, you'll be notified, so it's an easy way to keep up with what's happening. And as far as what happened today, it was a nice big update. But before I turn my attention to that, I want to talk about something else real quick, because it kind of bugs me when somebody makes these kind of claims. I made this article today. It'll be on the front page, but it's over on Market Watch already. Long-range macro calls are for entertainment, right? They're not for investing. And the point of the article was that, when you make a 5-year call, or 10 or 15 or 50 or whatever it is, the odds of you getting that right are like nil. And even if you do, the drawdowns are probably going to be horrible while you try to do it, and so forth, right? The point is you can't make those kind of calls with any degree of accuracy, right? If you're 3 months, 6 months out, if you make the short-term calls, you'll get the long-term calls right. You don't have to make the long-term calls. You don't have to throw out these big, wild projections. So one of the articles I happen to have cited in here was about the gold to 25,000 an ounce, which happens to be a writer on MarketWatch that wrote it. And of course, he doesn't like me saying that, A.V. Gilbert. So he comes back and there's a thread in here where he's giving me a bunch of nonsense about how he can make these calls and make them accurately. Give me a break, right? That ain't gonna happen. That's the broken clock theory. I challenged him to show us all his calls, all these long range. He's so proud of them, so show them to us. Show us all your long range calls that you've made that are so accurate. Ain't gonna happen. I doubt it very seriously. So enough of that. Let's move to the markets. As far as what happened today, markets were up. We had about 1.5% on the NDX, 1% on the S&P. The gold was up a pretty good chunk today. Silver was up more, gave up most of it. Oil also up. Bonds were down again, 0.5%. Dollar was down, but actually cut its losses. It wasn't so much it cut its losses. It traded in a narrow range down all day. What's happening, right? Well, I guess it's the Federal Reserve, because I wouldn't know who else to attribute it to. Federal Reserve came out yesterday. It looked like they said pretty much the same thing to me, but evidently they said something else that I didn't hear, and that is that they're more dovish than we think. Well, two rate hikes this year doesn't sound that dovish to me, and whether they do 2 or 1, I'm almost certain they'll do 1, because they have made the proposition to us now that, if we raise rates, we're telling you that things are great and you should believe us. Well, maybe they are, but these are economists. Economists never see a downturn, and I'm sure this group of economists won't either. The market will tell us when a downturn's coming, and it's not coming yet. It's in fact going the other way, but whatever the reason for the rally today, technically it's right at the point where it needs to show us its true colors. And what I mean by that is, if we're looking here on the S&P, the daily chart, swing point low that we broke on the way down. Now we're testing it again second time, and we're doing a full retest regen. We're all the way to the top. We get right to the top. That price point's 21.45. We close at 21.24. So we missed it by 21 cents, right? We go over it, back under it, close underneath it. This breakdown bar's top is 21.25.34. So we go over it, back underneath it. What's going on here? Well, we're testing, right? And we're testing in terms of volume with 35 versus 33 versus 32. So we're pushing it with volume. So that's a good thing. The fact that we're pushing with volume, we got over it. That says we're going to test it probably again. I wouldn't be surprised to see us test it tomorrow. That will be the test. Elsewhere, it's already happening. NASDAQ, over the swing point high, does not have the volume. Volume here 18.5, 18.7, barely enough there, but not over here 21. That's going to be suspect bullish tomorrow. And if we move it to the weekly, remember I was talking about a high volume high. It was probably going to get tested. Well, here we are. We're testing. We're over it. Tomorrow, quad witching. We'll have volume pick up tomorrow. But to make up this volume difference, I don't think it can do it. So even if it does break, it's going to be a reconfirmation suspect tomorrow. So in other words, if it stays up over this high, it will be suspect. And if it falls under it, it's a failure at the highs. So even though we had a beautiful day today, it's not written in stone that this is going to hold. In other words, I would not be buying the breakout. NDX. NDX still trying to, it's lagging, still trying to come back to this high and the prior high, and that too is a high volume high. And if I go to the Russell breaks out. Now the Russell actually is leading, has volume 349, 343, 401. So again, this one has volume higher here, but not there. This one will also go suspect bullish tomorrow. So we've got breakouts, suspect bullish. And so now the question is, do you buy the breakout, which is what a lot of people do. You only have two trades, breakouts and retraces. Do you buy the breakout? There are cases where you want to buy the breakout, and then there are cases where you don't. I suspect rather strongly that this is one where you don't. And the reason for that, let me draw this in. The reason for that is you broke over this high, you broke over that high. A retest regen on this high comes to about right there, right? And this one, of course, is deeper. The breakouts have not succeeded this year. If this one does succeed, it would be surprising. And succeed meaning it goes on, it doesn't come back within 6 bars. The most likely case, if it does go higher, is that it comes back within 6 bars. And if it does, the more likely case then is a retest regen of this prior low of the high it broke. So why would you buy here when you more than likely can buy somewhere down here a few days later? In other words, if it continues up, you don't need to chase this. It's probably going to come back. That's the most likely scenario. So in this particular case, I don't think you buy the breakout. Now, I say that despite a breakout of 2 swing points and a breakout on the weekly time frame. Usually that you want to simply buy blindly, just buy it. Probabilities are fairly high. We'll find out tomorrow how it fades or stretches higher. I'm simply going on what's happened this year, because recent probabilities have a lot more power than distant ones. And so it looks to me like this is probably not one you want to buy. We'll see if that proves to be a correct call or not. You probably want to buy the retrace, if anything. The other thing is you're still divergent. You still have divergence in that the NDX, the S&P, and the Dow have not broken out yet. So that's another reason not to buy the breakout. Okay, world markets. Matter of fact, before we go to the world markets, let me share this with you, and then I'll be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So another reason not to potentially buy that breakout is what's happening in the world markets. And to see that, we have to come over to Europe. Now Europe had traded lower again today and was trading lower just like this day back here. Got the reversal, got a hammer reversal, but it had more volume. This is the CACs, right? The daily on the CACs, so the French market. So you go under, you go back over, but you got more volume. That says that you can come back out in here and test it again. So even though you hold above this high this low one more time, in other words, you haven't confirmed this ABCD structure to the downside yet, right? It's trying, but it hasn't. And you've got this retest regen bearish. It went to the top, trying to regenerate. That's also dependent on it getting under and staying under this low. All of those, it's trying to confirm, but it hasn't. That's the good news. The bad news, of course, is the volume the way it is. Now, if you go to the DAX, and matter of fact, while we're here, let's look at the weekly. So the weekly presses lower. You're doing 6.1 and you're doing 4.7. That's going to be about the same amount of volume. So we'll see how that one finishes too. Maybe that might end up a hammer reversal with lighter volume. DAX. Now the DAX is not quite the same in that the DAX did not make it to a new low. You had a low here of 10.797. You do 10.806. So you have more volume, but you don't go under. And you also haven't confirmed either the ABCD structure or the bearish retest regenerate. Okay? Same thing. That's Europe. If we go over to Asia, and Shanghai in particular, Shanghai looked as if it was going to try to trade higher. What did it do? A full takeaway. A takeaway bar says it's probably going to trade lower, and given that this is coming off the highs, and I believe a range trade is setting up, it looks to me like it's going to try to trade into this area. Maybe not tonight, but that looks to be its next stop. I would suggest that, given the way this traded last night, let me draw it this way, this area is more likely to get hit before this area. That's the way this is set up and the way it looks. If true, this really is starting to set up that range that we've talked about, and if that's true, then we're going to get some range trades. Now, this particular market had traded much higher, right, percentage-wise, and so it could be a much deeper retrace when it finally gets going. And if we draw all of these out, you can see how it can come right back all the way down to these lows for ranges on the way down. It's still in the second. It looks to me like it's going to come test in to this area, right, which is going to be the bottom of that range. That looks like where it's going to try to go. Given, the U.S. romp today, I don't know if it'll go tonight, but that's what it's trying to do. If I look at Japan also getting pushed lower. Remember they had the high volume bars? I said that probably marked the top. Well, it is marking the top, and now this one also is starting to get a range breakdown, or just about, and tonight it's going to try to break. And so that will be the test tonight. If it does, then of course this could trade lower, and we could keep drawing these all the way down, right? That's what that one's going to try and do. So you're going to try to trade to the bottom and see if you can break it down. If it holds there, reverses, then it would be, inside this range, trading, bouncing back and forth. That's what range trades are. That's how you trade range trades. You decide if they're one-sided or two-sided, and you trade them. Looking here on the weekly, you can see this is a very small decline off the highs so far, and the volumes are still on this bar. That bar's price point 1979, and the low is 19,467. So if I bring the daily back up and we look at that 1969 I just talked about is the bottom of that second range. And then if we get lower, right, you're getting down into the third range on the way down, third floor lower. That's the Nikkei. So you got China trying to range trade. You got the Nikkei trying to range trade. Hong Kong. If we look at Hong Kong is also trying to range trade, or actually is range trading. This was the first one that started. Remember I talked about it trying to come back into these two big bars. It got into those bars. Now it's trying to range trade off of them. Question is it going to range trade much deeper or not? Right? You can draw the deep ones. You could also draw inside here another one, which if you portray that one down, right, is about there. So that's what it's doing. It's trying to test into this lower area. There's one big bar here, a gap up. It's trading in that area. I suspect This is going to continue to, trade kind of a negative bias as it builds out a range. Can it bounce? Yes, most certainly it can bounce. Where can it bounce to? It can come all the way back up to here. If it does, great, trade it, right? If you bought some down here, trade some up there. That's what range trades are for. Europe, not quite clear what it wants to do. Asia, quite clear what's happening there. Let's go to the currencies. So on the currencies, so much of what's happening is overseas markets, and so much of what's happening there is currencies and bonds. So if we come to the dollar, dollar trades lower, right? Opens lower, closes higher. They're going to have a hard time pushing this under, but that's what they're trying to do. There is an ABCD structure to get it just under that swing point low. But the real story is the euro. Last night I was trying to talk about the euro. Most people are kind of baffled as to why the euro is strong as it is, and what I was trying to talk about last night, I didn't do a very good job, so I'll try again tonight real quick. Why is the euro strong? You would think it would be weak. Well, part of it is, of course, the ideal that the U.S. isn't going to move as fast, which is what people seem to be reading into this Fed meeting yesterday. I'm not so sure I agree with that, but then again, maybe I'm reading it wrong. But the other part of it is, maybe if Greece is going to leave the euro, you're getting rid of the bad balances on your checkbook, right? You got a big debit sitting there. So if they're no longer part of the euro, then the euro, quote unquote, is stronger, I guess. I don't know if that's going to be true. I mean, I can't think of anything else. That seems to be the only uplift to Greece leaving the euro, if in fact it happens. But for whatever reason, the euro keeps finding buyers, and it's trying to get up here and test this high. And really, the test is into these two bars. I've said this many times. I'll draw them out one more time. The real test here is these two bars. That's going to be, I mean, it's coming into resistance now, but that's the real crux. That's where all the volume is. That's where it's going to have difficulty. If it doesn't stop it there, then it's probably going to rise back up to this 119 area, up into this zone up here, because that's where it broke down on the monthly basis. And if it really got something going, it could come all the way back up to here, which on the monthly is a full retest regen. But it's been more than 6 bars. So on a bounce on the monthly, and let me bring the monthly over, I doubt you would get a full retest regen. So here's that low it broke. That's about 119.50 or so. More than 6 bars. Bounce all the way back up to here. The top of this is 118.46. The bottom of this is 119.73. Anything up into that zone is going to have a huge problem, in my opinion. I don't even think we're going to get that high. That's the euro. But short term, like we showed last night, there's an ABCD structure here. I mean, if it gets over this area, right, that I was just talking about, if it gets over this area, it can take it up to this 119 area. If it can get over here, that's the key spot to me. That's the euro. That's the currencies. And let's look at the bonds real quick. Bonds, both here and in Europe, are struggling still. This hasn't changed. This still is struggling, and I don't, today was actually a hammer reversal, but I don't know if I read too much into that. It does look like it's going to come up and try to do a retest regen again. Gold. I talked about gold bouncing pretty good. Nice big spike up. It came up into the swing point high. It's pressing 8 million going into 8.2, so it doesn't quite have had the volume. Top there was 115.50. It got to 115.61. So you go over, back under. That's a test failure at the swing point high. If I look at silver, silver actually tested higher right into the gap and then gave it all up. So if I look at silver and I look at the test failure here, right, over this big volume bar and then gives it up, and I look at the test failure on gold, doesn't look like the metals are going anywhere yet. And let's see, what else? Let me show you the major sectors, because you had a couple breakouts here that were important. One of them's biotech. Biotech breaks out, right? Clean breakout. Volume expands. This is going higher. That's going to put some juice into the NDX. Stocks trying to lift up, that will help. The real key, of course, is technology. So if we look at the XLK, you can see it's pressing back up, doing a retest regen off this prior low here. There's two of them together. That's going to be hard to get over, so I suspect it goes up and then probably fails at some point. With the biotech breakout, you got a breakout on healthcare. You actually got a nice push in financials again, right? New highs there with volume expansion. So there's a lot working here in this market to keep supporting it near term. The only negative thing that probably knocks it down hard, of course, is negative news flow out of Greece. And we'll end on that thought, and that is that you got an emergency meeting on Tuesday. I think it's Monday or Tuesday. I've forgotten now. I think it was Monday, actually. But it's early next week. That emergency meeting is at the highest level, and they're probably going to decide what the heck they do because the IMF today said if they don't make the payment on July 1st, they are in default. So either the ECB, Germany, whoever, is going to have to bail them out to make that payment, right? Or there's release the funds, allow them to make that payment to the IMF, and then probably forego their payments that are due in July, first and second weeks of July, because Greece won't be able to make them probably. So it's that's probably the decision that's going to be made, and kick the can down the road a little bit and keep working with Greece to try to work something out is my guess as to how this thing is going to play out. Well, that's it for tonight. As for tomorrow, you got quad witching. It's going to be a volatile day, probably some volume, some good volume. I wouldn't be surprised to see these markets test higher. I just don't know if they'll hold higher by the end of the day. That's it. Have a great one. Thanks for joining me. Take care, and I'll see you next time. Good night.